I know someone who does over $1 billion a year in mortgage business who still spends 50% of the day on the phone prospecting. Yet we have brand new people that come into the business that want to find the shortcuts.
Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It's going great. Can't complain. If I did, I don't know if anyone would even listen. But yeah, business is good. Looking curious about this economy we're getting ready to really dig down into. But other than that, I mean, business is good, life's good. So what about you, Raphael? How's it going?
Good. It's good to keep a positive attitude. But yeah, business has been going very well. I mean, I'm in a lot of retail side of things. So I have a lot of leasing clients we're looking for space for, and a lot of my franchise clients are in go mode. So it still seems like the economy is doing very well. And, I think everything like in life is all about mindset and putting your one foot in front of the other and just getting out there and hustling. But, we have someone who's very much has that mindset in the space of lending. Padi Goodspeed, is that correct? I just want to make sure that I'm saying that correctly.
That's correct.
All right. Yeah, Padi. So we were actually, for those of you guys who are listening, we had a chance to connect earlier, but we weren't able to make this recording happen. And luckily we were able to get back on to have the recording. Looking forward to really having a discussion and learning a lot more about your background. So welcome, Padi.
Thank you. Thank you so much for having me.
Absolutely. No, it's an honor to talk to you. So one of the things we like to do when we first get started is we like to learn a little bit more about the person that's across the table from us. So if you don't mind kind of sharing your backstory, I think that'd be awesome.
Of course. Yeah. Well, I'm from California, born and raised, which is great for a lot of things other than taxes. It's not just the weather, but Miami's calling my name. So I'm stressed out right now, tax time. So I've been doing mortgages for 20 years. I started fresh out of college. And so I started in 2002. I have 20 years of experience. I'm ranked as one of the top 100 women in mortgage. That's based on production. So it's not about who you know or how you get placed in an article. It's strictly numbers driven. So I'm very proud of that. Worked hard for that. I'm a single mother. I've been divorced since 2013. And I like to emphasize that because I never have enjoyed talking about myself, but in more opportunities like this that I've had, I have found that it's been really inspiring for other moms to hear that. So I've been a single mother since 2012, and I've been divorced since 2013. I have two beautiful daughters, 15 and 12. The youngest one's about to be 13. They're very busy. They're very accomplished. They are very independent because they have a crazy mom that works 18 days a week. So so it's fun. And I love this business. I love what I do. I've had the same friends I've had since I was 7 or 8 years old. I believe in the power of community. I love people. I love what I do. I love my team, and I'm excited about, what's happening right now, even though it's scary for a lot of people. I think those of us that have been through a couple runs like this, we're excited about what the next run's going to look like and excited about what opportunities exist today. So my mindset always kind of has a bias towards the positive because I'm a solution-driven type of person. So that gives you kind of like a clear picture of who I am. A little crazy, but very, very ambitious.
Well, it's very important to take that approach because I feel like a lot of people, get caught up in the 24-hour news cycle. And again, all the news is to try to grab your attention. And the best way to grab your attention is to throw out negativity and shocking news titles, when in reality, the world is what you make it, right? What we can control is our mind and how we approach our day to day. And if that's what you isolate and go for, it's, the sky's the limit, really. So.
Yeah, I agree. To that note, I would like to highlight that I started a webinar. It's a free space that people come together in the community because it's absolutely impossible, as you know, to answer every single DM about what does this mean? What does that mean? And every time you post about something, you're generating either fear or excitement or a doubt with some headline. So I created a webinar called The Truth Behind the Headlines, where we really dive into all those things. And we just talked about how insane it was that by Friday, the world was on fire. Everyone thought the banking system was collapsing. And literally by Monday, SVB became the safest place on earth to park your money, which goes to show that these headlines are messing with your head. Leave them alone. Take a breath, take a step back, and just listen to what's really happening. So a great point.
No, for sure. No, and I'm sure those webinars are going to be great going forward as well, because you can that's a corpus of content that you can create that to help your clients understand what's going on, and that's ultimately the value you can provide them. So that's awesome.
Thank you.
Earlier, before we started the podcast, you kind of alluded to you diving into the real estate sector. What got you interested in that? And can you explain maybe the little bit of the beginning of that for your career to kind of inspire other people? That'd be great.
Of course. It's so this week I got a contract for a client, and it's their very first home, and it's a halfplex. And it took me down the journey of my very first home. I bought a halfplex. I remember I was super young. I drove like this Honda Civic or something, and I was like thinking I was just badass, I was like so cool. And I bought my very first home, and it was a halfplex. And I always tell people, if you take a duplex and you rip it apart and you only own one side, that's what a halfplex is. But that was my halfplex, and I was so good about it. And I bought it for $240,000, and I sold it for $350,000 about 4 years later. And that was my very first exposure to understanding the power of real estate and understanding what you can do and what you can't do. I was actually still too young at the time to fully grasp, investing and compounding, because my parents are immigrants. My parents are from Iran, and I'm a first generation Iranian in the United States. So we didn't really have any understanding of how all that works. I had to learn everything on my own. So I feel like real estate is one of the only ways many of us have to access generational wealth. It's, this is how we establish it. So it's kind of on me to do that. That was my first exposure. And then I bought more properties. And here's the interesting thing. I owned other properties. I had big house. I had a couple other side properties. But because I was overwhelmed and scared and I didn't know what to do with it, I actually sold all of those properties prior to the 2007 and 8 crash, which was super interesting. So I didn't take the losses that people took. In 2007 and 8, I was home for 13 months with my firstborn child. It was like God sheltering me from all that. I made that decision. So I sold my properties. I wanted to have enough cash in the bank to say, I want to be home and I want to be a mom this year. And I did that. And so I realized in hindsight that was, God kind of protecting me through that time frame. But also in hindsight, I learned what an idiot I was, because if I kept those properties through that cycle, I would not be working today. That was my very first first youthful round of kind of learning. And then as I made a decision that I wanted to be a prominent figure in mortgage lending and I wanted to become a $100 million producer, when I made that decision and I started to understand what it would take to do that, I realized the value of, don't buy so many purses and shoes and jewelries. I needed to start putting that money towards homes and real estate and investing. And I was able to accumulate 16 doors through this last run where we had, lots of income and lots of transactions, and being able to put that money towards building a single family portfolio, with my corporation under my person in various ways. So I'm a firm believer in buying and holding real estate. I believe that we use real estate to buy income. I believe in the power of cash on cash return. So, and of course, that's what I'm using to build my portfolio. And hopefully I'll transition into much bigger projects soon.
That's amazing. Yeah. And it's interesting that you had that realization. Obviously everyone kind of has that realization at different points in their life. Luckily in your case, you had that realization, and you took the 10 years or 12 years or 13 years, however long since you had that realization, to now build up your portfolio. And you can leverage now all the properties that you already have built up, that you've accumulated equity in and everything else, to now go on to bigger and better things. And again, why do you do that? It's because the financial freedom aspect. You have the flexibility to do what you want to do at some point in time. That doesn't mean that you're ever going to stop working. I'm sure you're probably similar to us, where it's like, we love to work. We love what we do. We get out there, we hustle. That's just in our nature, but at least you have that flexibility so that, if you want to, go hang out with your kids for a month or two, you have that ability to do that. So,
Yeah.
Yeah.
And I hope every agent who listens to these podcasts, there was this really profound quote I saw on Twitter. Someone was sharing a story. It was a mentor or someone told him at some point, he was like, you sign listing agreements, I sign loan documents. And that was his aha moment, that he had to stop being focused on commissions and start learning how to invest. And I think the sooner we as real estate professionals have that light click, you need to take action and become an investor. The rich people aren't selling, the rich people own. So we need to really make that distinction in our lives and use the money that we're earning to build our future, because we don't have those pensions.
Oh, absolutely. Yeah. Relying on the government or really anyone else is not a good move to do so over a long period of time. So I definitely agree with you on that front. So one of the things I'm kind of curious about is obviously, similar to the brokerage profession, in the mortgage banking space, it is a sales role. So you had mentioned how you had gotten into the space early on, right out of college. What are some of the early struggles that you faced as you went through that process? Because it can be tough getting started in the space.
Yeah, it's really tough. So I don't know if you guys remember what encyclopedias are, but encyclopedias are really large books. And back when I started in mortgages, they gave you a farm pack the size of an encyclopedia with everyone in the communities or zip codes, name, address, phone number. And at that time, there were a lot more phone numbers listed. So I would sit in the office and I would take those numbers and I would call on people and I would ask them if they wanted to refinance, if they were interested in selling, or if they wanted to buy. So my introduction to the business was an assistant type that was sitting on the phones, and I had no problem being on the phone. I had no problem speaking with people, but I learned the toughest way to get business was my introduction to the business, which was cold calling. And I believe that, again, that was another way of God protecting me and teaching me and giving me these tools that are so difficult to teach today, because we have a culture of instant gratification. How much ad spend can I do? How many dumb dances can I do on TikTok to go generate a bunch of business? And now I'm going to position myself as an expert, as opposed to having to actually pick up the phone, build the communication skills to talk to people. So that was the tough way that I got introduced to the business in terms of how to grow and how to talk to folks. But also it was a much tougher time 20 years ago in that women were not respected in the space the way that we are now. I think you guys know now that women have a little bit less of, it might be easier when you're talking to a woman to let your guard down. You feel more compassion and a sense of warmth from women, and men are more logical and, different. We have our differences, which I'm a firm believer in traditional gender roles. Okay. I like being a woman and I don't want to act like a man to be a successful woman. So I share that to say it was really difficult that a lot of men would talk to me on the phone like I was their daughter. And there wasn't a way to turn that to your advantage. Either you get flirted with, or you get hit on, or you get treated like someone's daughter, all of which feel condescending and disrespectful in ways that you have to get through the business. As a matter of fact, something I'd love to share is that I remember going to a bunch of real estate events, and many of those events were just a whole bunch of, it was like a drunk fest. Everyone was drinking and partying, and that's what the industry events had been known for. So at some point, I made the decision that I'm not going to partake in this anymore. I'm going to start creating my own events. And I did that with all the fear and all the doubt that everyone would have in a circumstance like that. I was like, why am I going to go to an event where for every realtor, there's 4 lenders here? This is stupid. I'm going to create an event where all the realtors are invited and there's only one lender, and that's me. And I did that. And my very first event had over 100 people show up. And it was surprising for me. It was encouraging. It was very validating. And it was something I could not believe had happened unless I tried it. So, that's how it goes. I did all the hard things. I did them day in and day out. I did them consistently, and I still do them to this day. I know someone who does over $1 billion a year in mortgage business who still spends 50% of the day on the phone prospecting. Yet we have brand new people that come into the business that want to find the shortcuts. And on a final note on that is that in our space, we've had a lot of people that want to become influencers. So they're spending a lot of time making content and just kind of putting out whatever run-of-the-mill type of content is to generate a following so that they can sell digital products. Well, I'm here to say that those are the people that are primarily struggling with transactions right now, because they didn't prioritize the customer or the business, which at the end of the day, without that, you don't have a job. So that's my mindset. That kind of gave you kind of the full spectrum of how it started, what I did, all the struggles. And then, of course, being consistent through times like this can only happen when you show up and you're present and you're consistent.
Absolutely. No, that's some great advice. And I think that, like you said, especially in an environment where, transactions are happening, right? When there's a lot of, meat to go around as far as, the environment is, sometimes you lose sight of that. You think, oh, okay, we can do this things. It's not the meat and potatoes of the business, that it is a sales role. I mean, we are in the people business. We need to have conversations with people on a regular basis. Business development is obviously a part of the business. And especially in an environment where transactions start diminishing, there's less people in the market to do these types of transactions. There's fewer and fewer opportunities, and you have to be able to get out there and find them. So
I agree. Yeah. And this is the time where professionals like us have to take market share, right? I remember speaking, I was very fortunate to be a contributor to a mastermind in Arizona, where one of the gentlemen speaking has about $1 billion of multifamily under management. And I remember speaking, this was 2 years ago. I said, when one of the biggest challenges that you're going to see is that most of the financing that takes place on commercial deals are 5 years, 7 years, 10 years. What's going to happen to those deals that come due this year with interest rates, the prime rate being over 7.5%? You're going to have opportunity. Some people will think of it as devastation. People think of it as an opportunity. And I can tell you, as a real estate professional, you better be on the phone being a mass put investors in front of more opportunities, create solutions for someone that might be struggling, a seller, or find yourself an opportunity that might be easy to raise money on when you know that there's going to be some blood in the streets. So absolutely, it is a sales role. We have to stay ahead of it all.
Well, I know you spoke about your event and how successful that was and stuff like that. Do you have any other strategies that you use to kind of set yourself apart from like the competitors that you come up against? Are there any others?
Yeah. Well, my philosophy. So in 2009, when we started bubbling back up again, there was a refi boom because people had gotten a lot of their balances forgiven. So we started to see values come back in alignment with loan amounts. And then there was an FHA refinance boom because at the time, FHA loans didn't require an appraisal for a streamlined appraisal, which still exists, but at the time it was booming. In that moment, I decided not to take the low-hanging fruit. And while every single loan officer in the nation was focused on refinance business, I was knocking on real estate doors. I went to a Century 21 office that had the largest REO account. So back in 2007 and 8, when the banks foreclosed, they had a massive surplus of listings. So they'd knock on your door and say, hey, Jeff, I have 100 listings. If you go out and take a few pictures for me, a little bit more comprehensive than that, but giving you the short version, I'm going to give you those listings. So you would now get 100 listings from Chase Bank because you did that, right? So then there was this program called for the Fannie Mae owned loans. It was a home path loan. You didn't have to have an appraisal. It was a very easy way to do the transaction. You can close it in 15 to 20 days. There wasn't a single loan officer in my market who even understood what that was. And that's because they were focused on the refinances. So I went and got the largest REO account in our city and said, hey, they're going to start working with me. And then because of obviously their reputation, that took my reputation to a new level. And it was extremely well received. What I learned from that was what we all are told and we never do, which is to go against the grain. At the time, it seems easier to just focus on what makes you money. What that did for me was teach me that purchase business was what was stable and what would create stability through the years. I spent the rest of my career focused on the service that I would give to realtors and buyers and what they needed to know because that was stable and refinance business comes and goes. So when you saw, I did $183 million in personal volume in 2021. And in 2022, when the whole world went to shit, I still did over about 110 million in production because I stuck to my plan and I wasn't just focused on refinance business. So that's one of the strategies that I think a lot of people should implement. You don't want to always go for the low-hanging fruit. That's when every single car salesman comes into the lending business because they know it's easy for you to go get a deal and make some money, and then they go out of the business. So times like this where we're able to take market share because we've kind of been there, it's how you differentiate yourself is by not talking about what everyone else is talking about because it's easy. And in the COVID market, I found the opportunity through the truth behind the headlines to talk about my knowledge of, the economy. So I was in Clubhouse. Clubhouse is an app that boomed, kind of similar to what we're doing here, but without the video. And during the pandemic, everyone was home on our phones on Clubhouse. I got like 18,000 followers on Clubhouse, and I started to get business from places like Texas, North Carolina, Georgia, and Florida because they were hearing me talk. I was timid in those rooms. I was afraid to speak, but I learned that I knew what I was talking about. I never was in a position where we had to talk about what was going on. So when I started to do that, I realized that I can separate myself significantly from the competition because of my experience, not only in lending, but my experience as an investor and my experience just with guidelines and understanding what's happening in the market. And on top of that, the economy. So being able to talk about this, like I saw a brand new agent who I know who hasn't sold any transactions yet, gave this comprehensive view based on a headline that says interest rates took a nosedive after the SVB situation. First of all, that headline was outdated within 2 hours of being published. You can't know that. So you look at it and say, oh my God, my buyers need to hear this. And I'm talking about something that's outdated. So by raising your hand and correcting people like that in a polite and respectful, professional way, you really get to separate yourself. So you have to know your stuff. You got to read. I know that's hard for a lot of folks, but you got to read.
Oh, it's true. And like you said, I mean, things evolve. I mean, what happened last week is now there's updates that have occurred this week. So you're always having to stay on top of things and, question the headlines like you had said. So one of the things that I'm kind of curious about is obviously, as we record this, we've already kind of alluded to, the Silicon Valley Bank, along with that, we've seen a string of other regional banks have been affected by what's been happening. So if you can kind of touch on that a little bit, and also related to, how you see the environment shaping out in the residential space. And then maybe we can talk about multifamily a little bit too.
Yeah, absolutely. Well, the good news is that based on today's data, permits for multifamily homes are up. Now, for single family homes in the residential space, new starts are down 32%. Permits for single family homes are down 36% year over year. You're not seeing that same decline when it comes to multifamily, because we will become a nation of having a significantly large amount of renters as opposed to owners. There is a huge opportunity in the multifamily space. And then we can even talk about what I think the future is headed, where you have companies like Factory OS, which are doing offsite production and bringing them on site to the tune of 50 to 100 units that will significantly impact cost of housing and create more affordable homes. So that's the grand scheme of where I think we're headed. And I think that single family in the residential space is going to be impacted. So the SVB situation is really simple. So if I'm borrowing money at 0%, and I'm taking your deposits and I'm making loans at 2 to 3%, and I'm buying treasuries at low interest rates, and the market goes up, oh shit, I was okay when I had a 2 to 3% margin, but now I have to pay out more than I'm bringing in, and becomes a problem. Now I don't have enough liquidity. So I announced that we have a problem that we're trying to solve. Then the world goes into a panic, and everyone takes their money out of the bank, and I have a way bigger problem on my hands. So SVB announces that they are stressed and they want to raise capital to solve for a liquidity problem because of where the Fed funds rate is. So there's a panic, there's a bank run. Everyone says, I'm going to go take my money out. So then between Friday and Saturday and Sunday, there's a panic. And by Monday, the FDIC steps in and says, there's no limit on the insurance. We're going to make sure all the depositors are taken care of. And then SVB, within 72 hours, becomes the safest place in the country to park your money. Now, fast forward today, First Republic Bank their stock was down 35% this morning. That means that this is the domino effect of news like that. You have the regional banking system is struggling because they don't have enough liquidity. And if you are running to the bank to take money out, you're making their problem even bigger. So they have no choice but to go to the government for help. So they're getting the help they want. Just before we got on this call, the FDIC had made a statement. The feds have made a statement that they are 100% going to make sure that all depositors are covered. And this is for the regional banking system, not just SVB Bank. So you have this reassurance because there's no way that we can have this much chaos and the government, the American people running around worried about their bank deposits like we saw in 2007 and 8 with long lines of people lined up to take their money out. So the problem that it presents is that the regional banking system becomes weaker. The central banks, the larger banks, become a lot stronger. And that creates another imbalance of power, which is probably for another podcast in another setting. But what implications it could have on real estate is that lending guidelines get tightened, right?
Mhm.
So the first thing that you're going to see is more regulation. But guess what happens? I've said this for many, many years. You cannot ask for security and help in the same sentence. So I'm sorry, you cannot ask for freedom and security in the same sentence. So if I want to be a free sovereign entity, I can't say I need the government to give me a check every single month to live, because then I'm dependent upon the hand that feeds me. So when you're a bank and you're reaching out for this help, and now you've got this life jacket that comes over to you, guess what? You're going to have to be subject to a few new set of rules. We don't know what those rules are yet. We know that this insurance fund was established overnight to solve for this problem, to avoid bank runs, to create some ease in the panic that we're seeing in the market, right? Which is great. We want that. We need people to feel safe and comfortable in their daily lives. The last thing we need after a 2-year pandemic is people worried about where their money is going, right? So we needed that. But what happens now is more regulation. When you invite more regulation into the banking system, you're going to see tighter lending guidelines. So if you have more pressure on businesses, because the Fed will hike rates again on the 21st, the 21st to the 22nd, we're, I think, a minimum of 25 basis points, which also, I think, relative to this is, the Credit Suisse situation. You have the European Central Bank hike their rates by 50 basis points today, despite the same struggle that they're having in their banking system, because they said, if we don't get inflation down, we're not going to be able to survive that. That's a bigger problem. So we can protect the banks, but we've got to solve for inflation, which is going to definitely mirror what I think will happen on the 21st through the 22nd of the Fed meeting. We see a 25 basis point rate hike. We see another rate hike, which puts further pressure on banks, businesses, liquidity, the money supply. And what does that mean? Little less economic activity. Hopefully that means inflation comes down and we can see them take their foot off the gas in terms of rate hikes. So what it ultimately means for housing is that if you disrupt demand to the point where people are not writing offers, people can't afford to buy, the interest rate environment becomes too cumbersome, then you would see some correction in pricing to try to meet that demand. I think the outliers that we have, the kind of rare aspects of this equation, is that you have a 3.6% unemployment rate, which is the lowest unemployment you've seen since 1969. So people are working, housing is not crashing, people have money, and the government just said your money is safe. I don't know how that's going to equate to people spending less money unless the Fed continues to hike rates and lower the money supply and make less money available, and people start losing their jobs or cutting hours. So that was a long answer.
No, and that makes sense. And
Yeah, it does.
And it's kind of a difficult situation for the Fed to be in, right? Because obviously you have to get inflation under control. You cannot allow runaway inflation like we saw back in the 80s or the 70s, I should say. So there's obviously that part of the coin. You're right. The unemployment rate is still very, very low. People are employed. People are spending money in the economy. It's kind of indicative of the fact that the retail sector has just been booming, even in 2022, where everyone seems like everything's falling apart. But in the retail sector in particular, I mean, vacancy rates are at an all-time low. I mean, I have franchise clients we're looking for space for. They're gung-ho about keeping the foot on the gas pedal, and consumer spending is still at where it is. But now you see, consumer debt also starting to increase as well. So with rate hikes coming soon, that's also going to affect their ability to pay back that debt, which, if unemployment rate comes in, I think it's going to cause a lot of pain for a lot of people. But, I think it's unfortunately needs to get done. If it weren't for the pandemic, the Fed would have done this years ago, obviously, but we were forced into a situation where we had to, kickstart the economy. We had never seen a shutdown at that scale in our entire existence. And that was just kind of a knee-jerk reaction by the Fed to say, look, we got to keep this environment going. We got to keep the economy churning. And obviously that led to us having a significant amount of inflation. So, I think you're spot on in your analysis. So I appreciate that feedback.
Yeah, I think it's important for people to know that during the height of the pandemic, unemployment was almost 15%, and you still saw spending skyrocketing. So you can imagine why at a 3.6% unemployment rate, it's really difficult to get inflation under control.
Absolutely. Couldn't agree more. That's all.
It's going to definitely take a lot to kind of pull that back. That's for sure, as far as the rates go. So I'd be curious to see how far it really goes if I had a crystal ball in my hand to to tell, but
it's going to go
yeah.
higher. It's going to go higher. I mean, like you said, we've got to almost suck the air a little bit out of it, because otherwise, like you said, like Patty was saying, I mean, we don't want to let inflation run wild, because that's really bad for the economy. That could be crippling for us for years. So
the best analogy I've heard and I've shared with my community is that if you have inflation at 5% for 5 years in a row, and our wages did not grow at that same rate, which they will not, they have not, and they will not, we would all need to work double the amount of hours to sustain our cost of living. And I think that when as real estate professionals, when you're crying about not having as many deals, or buyers being difficult, or sellers not wanting to sell, I think you really need to think about the grand scheme of things. If we don't take this punch to the face now, we're going to have serious problems in the next few years.
Absolutely.
Yeah.
Definitely.
I mean, couldn't agree more.
So go ahead, Jeff. I'm sorry.
No,
so one thing I'm kind of curious about, and obviously this is something that we like to ask our guests near the end of the podcast, is what one piece of advice would you share with an individual? So if you could go back in time, maybe talk to your younger self, or maybe, like you said, maybe talk to one of the younger agents or younger brokers in the environment right now that is going through this. What type of advice would you share?
Depending on your age group, I mean, the youngest, you don't really quite know yourself until, let's say, you hit about your 30s or mid 30s. I'm 40 now. I know I look 20, but I'm 40 now. Okay. And what you don't really get to know yourself until you're around 30. And if you're making serious life decisions in your early 20s, those will change the rest of your life. There is nothing that was more detrimental to me than that divorce that I had to go through. I grew up in a conservative way, and I felt like marriage was the appropriate thing to do at a very young age. Not only did I miss out on a lot of fun with my friends, but I also missed out on massive opportunities. And then, of course, the aftermath of such a life event, meaning having to pick myself up, relearn myself, go back, and then do that while carrying 2 children and completely raising them on my own, financially, physically, and everything, was extremely difficult. So I think there are some decisions that you make early on in life. You don't know yourself. You don't know what you want. You don't know what it's going to feel like. You don't know. And I think be comfortable in the unknown and just be patient with yourself. Let some of the chapters unfold. See what's going to happen before you make any permanent decisions. And of course, I think anyone that's been on your podcast would say, if I could have bought earlier, I would have, right? So whatever you buy, try to buy something that's sustainable, that you can hold for the long term. I talk to a lot of people that can't afford to buy a primary residence in the place that they live and work, right? But they can afford to become an LP in maybe one of your funds and one of your deals. They can afford to maybe buy a $100,000 property in Cleveland, Ohio, and get some cash flow. Something is better than nothing, because when you wake up, the next 5 years will pass just as fast as the last 5 years did. So if you just remember that every time you want to make an investment, you're going to realize that time is going to fly, and you're going to look back and say, thank God I did that, because the $10,000 or the $15,000 or the $100,000 that was just sitting in my bank account would have done nothing for me. But at least over here, I made some money. So those are the thoughts I have in terms of advice.
That's amazing.
Great advice.
Yeah, amazing. Yeah, and I think you put up a good point. Like, we're still evolving as people, like you said, all through our 20s and early 30s. There's a book I read called The Defining Decade, that talks about, the period of your life within your 20s. And, that they do share some of that advice. And they also share some advice about focusing on something and going for it. So in your case, with your career, I mean, you started out when you're 22 and you put your nose to the grindstone, and obviously that has led you to where you're at today as a top producer. If you hadn't made that decision and really focused your intent in that one direction, obviously that you may or may not have had the same opportunity. Yeah. So it's one of those things where, obviously in a career standpoint, it's really smart to be deliberate about where do you want to go. So
yeah, focus on that. There's things that no one can take away from you. Those are your accomplishments, what you've studied, what you've learned. Like, missing out on 1 year of making money to travel the world would be the best gift you could give yourself. Like, it's not going anywhere. The rat race ain't going nowhere. Focus on you figuring yourself out. And if you think you've got it figured out, then that's when you're making the biggest mistake, because as you grow, you're always going to learn. Another little ism I tell myself is every level is entry level. Every single level is entry level. Like, if you think about a video game, you pass a level and you think, oh, great, I'm on level 4. Well, now you got new demons to beat in that level, right? So every level is entry level. So you're always learning.
That's awesome.
I like
That's some
that.
good
I
advice.
like that analogy.
Thank you.
I know earlier you alluded to reading and you're like, read books. So Raphael and I are both avid readers as well. And one of the questions we love to ask our guests, it's kind of a selfish thing for us because we always get really good book reviews out of it. Um, and one of them is just, one was one of the most impactful books you've ever read. And it doesn't have to pertain to real estate or lending or any of that. It's just that's maybe changed the trajectory of your life or.
Yeah, that's an interesting question. I read a book called A Boy Called It, and it was about a kid that was extremely abused. And it was one of those books that I couldn't put down, similar to The Alchemist. The Alchemist is another book that I was just unable to put down. And I think that why it was so impactful to me, it because it evokes your human nature in every way. You know, your desire to protect, your desire to understand, your desire to solve, your desire to, or this cringy feeling of how could you. And what it also helps you do is, and which helps in business, is that it makes you realize that you just never know what people have gone through, right? You meet someone, you have no idea. I have no idea sitting with you, looking at you, Jeff, today, what fight you might have had in the morning, what bad news you could have received this morning, what you're carrying with you. You have no idea what I just went through. You have no idea that I might have cried myself to sleep last night because I forgot to kiss my daughter before she went to bed. Every single interaction that we have is human. The one thing, the one piece of common ground that you can have with any person, any prospect, any friend, any human on earth is that fact that you're human. So I think that reading books that really get us back in touch with those emotions and really having that balanced mindset really helps in the relationship building process. You guys know the value of relationships, whether you're attracting investors, whether you want to attract sellers for opportunities, whether you want to do more transactions. There is nothing more valuable than relationships. There's nothing more valuable than your reputation. And I think the more things that you do to get you back in touch with your heart, to make you realize you're human, and from a heart level, you will be able to connect with anybody, that's the game changer. I've been on Twitter since 2011. I always used to tweet lyrics and poetry and things of that nature. I actually got a DM from a venture capitalist in San Francisco who sold his company to Box for over $100 million at the time. And he just wanted to talk. He just wanted to get to know me based on that human element. When we sat down, we had a very long dinner and he cried. He cried in that dinner. We exchanged a human experience, and I will never be forgettable to him. He will never be forgettable to me. And I think if you have the ability to make eye contact and connect with people on a level that they don't experience regularly enough, unfortunately, you will be unforgettable. And that's what that book did to me. I've never been able to forget that book. And I never ever stopped thinking about how much pain someone could go through that you just wouldn't even know what they've been through, and what humans are capable of. That's so disturbing at some level. So compassion and love and really those elements matter so much in business, but we don't talk about them enough because we're too busy looking at graphs.
Oh, sure. No,
Yeah.
everything's we're in sales and business in general. We deal with people. And like you said, I think a lot of times too, when you're dealing in a sales role, you take things personally sometimes. Like if you have a conversation with someone, it doesn't go well for any reason, you may put that on yourself and say, oh man, or you may say, oh, why is he so mean, or he or she so mean? But in reality, like you said, you don't really know what they're going through. They could just be having a bad day, and you just caught them at a wrong time. So, putting that into perspective as you're having those conversations, will help you, not only from a mental health standpoint, but also from the fact that, again, we're here to serve other people. So.
Yes, we are. Yeah. I love that you said that.
Patty, as we start rounding out the podcast, I just want to say how much that we appreciate you coming on here, and it was just an honor. And I love to hear your story and how you um, gained all your experience. And I know that people are going to find value from this podcast. So one of the questions that we have is we have a CRE treasure chest. It's a repository of things. It's that people our guests give, and it's an ebook or a case study, something that they may have wrote an article that they find interesting, or any of those things. So our question today is, what are you willing to contribute to that treasure chest?
Wow, I have a few different options. When I was in Florida speaking to a room of 200 women in the commercial real estate space that were worth anywhere between a few million to hundreds of millions of dollars, I think one of the things that I got some good feedback on was this kit I created, which is your personal financial statement, right? If you want to get started in the commercial space and you don't have a personal financial statement put together and you don't have your documents in order, this is with my financing hat on, then you're always going to be that guy who's on Twitter complaining about your lender asking you for the same things over and over and over again. How many people hate working with a lender because of that? So I just created like this super cute, really simple kit that helps you get prepared for your conversations with lenders. And I'll be happy to add that to the treasure chest so people can understand if you have your paperwork organized, it's a game changer when it comes to conversations with lenders.
That's
I agree.
amazing. Oh yeah, that's going to be super helpful because I can't tell you from the brokerage standpoint how many times it's like, if you have all those documents in order and it's just, a cut and paste type situation where it's like, here, have all the documents, it makes the transaction go so much smoother. So I'm sure there's going to be a lot of people who gain value from that. So really, thank you, Patty. That's awesome.
Yeah.
Of course. Thank you.
No, for sure. So again, thank you for your time, Patty. I know you're extremely busy and we're looking forward to keeping in touch and learn and again, that's part of the reason we do the podcast too. We get to meet awesome people that are doing great things in the real estate space. So we do appreciate the opportunity to connect. But as far as, other people wanting to connect, whether that's, they're in your local market and they're wanting to, buy a home or buy any type of residential or commercial property, what's the best way for them to contact you?
Yeah, so I am all over the internet as my name, Padi Goodspeed, which is Padi. That's the difference. Goodspeed, not Godspeed. So it's two O's. I always say it's Godspeed with two O's. So Padi Goodspeed on Twitter, Padi Goodspeed on Instagram. I'm very responsive. Instagram links directly to my cell phone, email, DMs. And of course, my website is paddigoodspeed.com. And I do have the monthly webinar where I deep dive into the economy, deep dive into what the predictions are, housing, inventory, so on. And of course, if you follow me on Instagram at Padi Goodspeed, then you'll be able to see all the various real estate projects, land flipping, and hopefully when I enter into the retail space and I kind of share that with everybody. I'm looking forward to doing one of those crazy deals where I buy something for under $1 million and I sell it for like $5 million. That's been my request to the universe. So
well, add my name to that request, please. Yeah. add that to the request for the universe. That's awesome. No, that's great. And
that's happening for sure.
Oh, for sure. I have no doubt, Patty. I know you're going to be killing it in the future, and we're really excited to see your continued growth in the commercial space. But so what we'll go ahead and do is we'll include all those links in the show notes as well. So if you guys are watching this on YouTube, again, go access them in the description. If you guys listen to us in a podcast format, whether that's Spotify, Apple Podcasts, whatever, it'll be in the description as well. So again, Patty, thank you so much for your time. We greatly appreciate everything that you've been able to contribute to the audience today. If you guys will listen to this in a podcast format, we would greatly appreciate if you could leave a 5-star review. It makes a huge impact in our ability to reach a broader audience. And we've gotten a lot more downloads on a regular basis as a result. We've also had, on the YouTube front, if you are watching this on YouTube, we would greatly appreciate if you could like and subscribe to the channel. It really makes a difference in the YouTube algorithm and ensures more and more people can hear this message and learn about the many facets of commercial real estate. So thanks again so much for tuning in, and we'll see you all next time.